Yeah, good afternoon. Okay, during the last education events, we discussed basically on some fundamental aspect of investing in shares. And basically, under that discuss topic, we discussed basically how we can find out the suitable investment options, right? By analyzing that available alternative stocks by using different kind of ratios and other macro and microeconomic factors, right? Especially when we are talking about that the investment opportunities available for an investor, right? As a wise investor, basically we need to identify basically the importance of two approaches, right? Namely that the fundamental aspect and the technical aspect, right? Today I'm going to cover the technical aspect in investing in shares. Basically, we need to focus the main indices we can use in technical analysis and the interpretation and predictions techniques we can use to interpret the future prices of our selected entities, selected counters. Basically, in technical analysis, we need to focus on previous or the historical data, and based on that historical data, we need to predict the future price movements, right? For an example, if we can monitor the last price movement for a certain bank for last 3 years, and based on that last price movement, there may be up and down and some fluctuations, some trends can be identified within that time period. Then based on that time period, we can predict the future. But to predict the future price of a certain share, that prediction should be backed with some technical theories, technical indicators, right? First of all, I would like to show the market today, right? To initiate the events, because you will be familiar with the market and its behavior first. Then one by one, we can go to the theory next to the practical aspect, and we can discuss some examples, right? Within the CSE, Colombo Stock Exchange. You can see what I shared here. You can see the today's market, and it started at 10:30 a.m. and closed at 12:30. This is the current situation. This is the current situation when it closed at 12:30. You can see here, there are, yes, names of instrument. You can see different names that we can see here, right? And here also you can see that ASI, right? At the top of your left hand side, you can see here ASI. Okay, ASI, you can see here, that is 7,721.78. Okay, first of all, you would be fully aware of these indices, because indexes are normally used to interpret the direction of a market, especially in equity or any other market. There might be some indexes. Indexes mean that the normally some calculations methods we can use to calculate that price movements of the entire market or a selected entities to get an idea about the overall market performance. That is why we can use different type of indexes. But in the Colombo Stock Exchange, basically we use two indexes. Number one, this is the ASI, all-SI index. You can see here 7,721 and 7.78. Compared with the previous day, there's a decline of 0.14, 0.59. Then it means that overall today's market performance is negative by 14.59, right? This is the current or the today's market performance. Then anyone can say today, right? Today market is a negative market. Today market dropped by around 15 point, right? 15 point, and you can see the percentage 0.19, right? In addition to that, there's another index we use in Colombo Stock Exchange that is called S&P 20 index. Under the S&P 20 index, you can see here the amount, the figure 2,468.80. Compared to the previous day, there's a decline of 8.87, right? As a percentage, 0.36. There's a then you can see at a glance, you can see at that ASI and S&P index. Then overall, you can say that today market is negative and today market is a drop market, right? Then that is why we need to focus on that. That is why we need to identify that different type of different indexes using Colombo Stock Exchange to interpret the overall performance of the market, right? That is it. Then you can see here different instruments, right? I'll click on those instruments one by one, and here I identified and I selected here Indian Oil Company Lanka IOC, LIOC is the company, right? Here I want to educate you that in an open economy, there are many instruments and services. So there are many instruments, right? Any commodity, any goods or service, right? In an open economy, the good and service are priced based on demand and supply situations. You know that in economics, the theory of demand, theory of supply, and equilibriums we have learned in that our theories in economics and management, right? Demand and supply forces, those are the natural forces in the open economy, right? You can see here, I have taken that the market depth of Lanka IOC company. This is a today's situation at 12:30. At 12:30, right? Now you can see here in blue color, you can see here different prices with different quantities. Once again, okay. I can enlarge this, right? Okay, right here. In the left-hand side, you can see that the green color, so blue color. There's a other side is in red color, right? In that blue color portions, you can see different prices and different quantity. Bit quantity, you can see 30 shares, 1,000 shares, 30. Here at 77 rupee, there is a buyer. Total number of shares request 25,700. This is the buying side. Okay, you can see that we call that this is the buying side. This is the selling side. Okay, here I want to that educate you that this is similar to a market with sell and buy goods. It's like a Sunday fair, right? In the stock market, you can see different buyers and different sellers solving their desired prices. Okay. Then today, Indian Oil Company traded at 83.50. This seller is at 83.50, because before that, technical analysis, we should understand the price mechanisms in the stock market, right? How is the price is decided in the stock market? That is based on the demand and supply situation of the at the moment, right? Because we know that there are a lot of companies are having good fundamentals and good performance, right? Especially they are performing well and making and generating huge profit, like billions profits, right? Good proposal can be seen in their business, plans, right? Huge expansions can be seen in that company. That kind of good companies paying good dividend and having back with that other fundamental, sound fundamental like EPS and as we discussed that day, asset value. Those companies are backed by many investors because fundamental values are there, right? Therefore, that investors normally chase with that. Normally, investors chase with that companies, right? Especially in here, I took the LIOC because according to this crisis in the country, energy crisis in the country, last 3 months that the IOC company generated 3.5 billion for the last 3 months. For last 3 months, the Indian Oil Company generated 3.5 billion profit for the last 3 months, and this price was around at 30 rupees before 1.5 month time period. Then now it is at 83 rupees and 50. Most probably that might touch 90, then 100, because that kind of trend is there. There's a big demand for that, for the shares of that IOC, because investors know, especially that with that crisis, that there's a significant improvement in that increase in that fuel price. Therefore, the IOC company directly they import that oil from India and other world market. Then when they are selling at same price like CPC, then they normally generate a big profit per liter. Therefore, right? Therefore, we can confidently say that next quarter also might be very good, and they may generate more than 5 billion profit for the coming quarter, right? Okay. I'm talking about the demand and supply situation of a company, right? I'll get another example. Commercial bank. Yes, this is the commercial bank order book. This is a buying side, this is a selling side, right? This is a buying side, this is a selling side. You can clearly identify that. The price is at 55. Normally it is trading around 53 and 55 level, right? There's a range because due to that, situation in the country and financial and other crises, political instability in the country, that and in addition to that, due to the COVID pandemic situations, that the banking share prices came down drastically because of that negative macroeconomic factors, right? Due to that reason, the commercial bank is now trading at 53 rupees, 53 and 55 level. Normally that is around 55 range, right? Then previously it was around 150 above, right? Now it is trading at this much price because that the share price is normally share price of a company is reflected and back with that fundamentals and macro and microeconomic factors of the company. Okay, macro factors of the environment and micro factors of the company. All right. Okay, this is the order book of the commercial bank. In addition to that, this is the trading panel we are using to trade in Colombo Stock Exchange, right? Normally, an investor, after registering in the Colombo Stock Exchange and opening a CDS account, normally they can have this facility online. They can use these platforms to buy and sell their shares and to have some analysis, right? To have some analysis, and they can draw chart and other etc. Okay. In addition to that, you can see here the turnover, daily turnover today. You can see here less than 1 billion, 866 million rupees. That's a daily turnover. This is a less amount compared with that, bull market, right? Because in bull market, normally that amount was around more than 8 billion, more than 5 billion, right? I'll explain because I say that bull market. I think you would be very familiar with those technical words, right? There are two words, two markets, right? We can say that the bull market and a bear market, bull and bear, bull, gonasa, bull and bear, right? In the bull market, bull market means that continuously we can see the upward trends, and there are some, big gathering of investors, and they are chasing shares and they are collecting shares at a higher prices. They push share price up, and it continuously go. The share prices continuously go up. That kind of market is called the bull market. On the other side, opposite of that is called the bear market. In the bear market, we can see sluggish market movement, no any significant uptrend, but only that the decline market trends can be observed in that kind of market, right? Therefore, that market normally in that markets normally we have to be very much vigilant, and we have to practice the wait and see policy, because we need to find out that suitable entry point to purchase shares at a lower price, because that's the only way of getting valuable shares to their portfolios, because we need to enter at a lower price. Okay, in the bull market we can get quickly get some funds bucks, because normally we can enter and we can dispose, buy sell, and we can quickly get some profit and returns. That therefore bull market is very famous among investors, because most of investors, they gather and they push and chase shares prices, and they get more profits. In the bear market, we can see negative market and always that decline market. No any significant improvement, only that share price declines and share market drops situation can be witnessed in that market. Okay, that's the bull and bear market. I'll explain one to A to Z, because you would be very familiar with that. These stock markets matters, the matter entire spectrum of the stock market, and the activity should be known by you, because one day you might have a serious account and one day you might invest in the stock market as an additional income source, rather than depending on your personal and self-employment, or depending on your personal job, right, your employment, right? Okay, now actually that I have to mention one thing, right? Why we need to understand about technical analysis, because we know that everything has a rhythm, right? You know, in this world, universe, think about the universe. Normally, that our world rotate around that, itself in the it rotate in its own axis, and while rotating around the sun, right? Even we can see that a heartbeat of our body, right? Certain number of beaten can be observed in a heart, right? 72 per minutes, right? Like that. Therefore, everything has a rhythm, right? Everything has a rhythm. That's the natural, nature of the universe, right? Therefore, we can see this kind of trends in the market. Different cycles can be observed. Think about the interest rate, cycle in the Sri Lankan economy, right? For every 5 years, we can see up and down trend, right? Because for 4 years, they are gradually the increase. We can observe some increase in interest rate, and then after 4-5 years, we can see some gradual decline of interest rate. Therefore, in your personal life also, you can observe some certain time of patterns and rhythms, right? We need to understand that while trading the stock market, you have to be in the market, right, by heart, because then finally you may live in the market. Then you can find out the opportunities, right? Your eyes can easily catch the opportunity in the market. You can easily identify the exit point and entry point in the market. Those circumstances may generate a wise and rational investor one day, definitely, right? Therefore, you have to be in that much in the situations, right, after understanding the overall market situations and its A to Z, activities. Right. What is yes? Okay. Here there are some technical analysis tool also can be seen here, right? Before that, I would like to just share that our basic theories in technical analysis, and we can again come to that. We can come back to that this site, and we can do some certain analysis, right? Practically. I think you can see what I shared here. Can you see? I want to make sure that you can see that. Can you see, no?
Yes, sir, we can see.
Yes, sir.
Okay, right. Selection of shares by technical analysis method. Okay. As I previously mentioned that we need to be aware the meaning of that technical analysis. As well as I previously mentioned that we need to get the historical price movements, historical informations to predict the future market price of a certain say or the commodity, right? Any instrument may be that. Actually, the one thing I should mention here in Sri Lankan equity market and all the capital market is small compared to the big and developed countries, right? There are only two options we can trade on. We can purchase shares, equities, and we can purchase some debentures, government securities, and corporate debentures. That's all. But in the developed market, we can see some futures, options. There are lot of options available in that developed market. But being a small market, we can have only that debt and equity instrument in Colombo Stock Exchange. Right. Okay. Let's move to that our topic, technical analysis. Right. You can see here technical analysis in the attempts to forecast stock prices on the basis of market derived data. They are looking for trends and patterns in the data that indicate future price movements. I explained previously what the technical analysis is. Normally, we have to carefully analyze the previous price movements, the patterns, trends. Based on that previous price movement, patterns, trends, we should have certain analysis on previous price movements or the past price movements, and based on that historical data, we need to predict the future price movement, right? There are some technical indicators we can use 100% sure. You can surely use some indicators 100%, right? There are some instrument, right? Therefore, we need to further, you may identify that those instruments when I explain those things in next slides. Okay, you can move to the next slide. What's a chart? There are three types of charts can be seen, right? Right. We normally discuss in technical analysis, right? What's a chart? Chart is a time series analysis, right? We can see some, something product on the two axes, in between two axes, x and y axis. We can see that there are horizontal and the vertical lines. In between, we can mention that the time period and value, right? Then within that time and value information, we can see some product informations, right? That is called the chart. That's the cause. You can see here chart. We can mention here, this is the time period, this is the value. This is the time period, this is the value. You can see within different dates, there are some certain values. You can see the different values, right? This is called, this type of thing called as a chart. Because especially in technical analysis, we need to use charts, because without analyzing charts, right? The chart is a certain, graphical representation of the past price movement. That's a graphical representation of past price movement of a share of any commodity, right? Any instrument, right? Therefore, we can clearly identify the movements and trends. You can see here the starting point in 99, right? Okay, there's some downward trends, then gradual improvement can be observed here. You can see here there are some two top here, and then again the bottom. Okay, we can see up and downs. Some certain trends can be observed and witnessed. But this type of graphical representation is called chart, right? Therefore, we can't forget about charts when you're talking about technical analysis. Remember and keep in your mind, chart is the most and very important equipment we can use in technical analysis. Okay, as I previously mentioned, there are three types of charts, right? Number one is bar charts, open, high, low, close bars, right? Number two, that we can mention the line charts. Number three is the very famous charts category that is called the candlestick chart patterns. How many chart patterns? There are three chart patterns. Number one, bar charts, open, high, low, close bars, right? That is called the bar chart. Second one, the line chart. Third one is the candlestick chart patterns, right? We can use normally three type of charts in technical analysis. Okay, this is called bar charts. You can see here. This is the chart. Then you can see there are some certain trend. There are blue, red color charts bar, and black color bars are also there. No? Within that bar, you can see some, you can identify a certain trend. No? Some trends and patterns. Okay, up and down. Or so we can say we can see some fluctuations, right? Within a given time period, we can see some fluctuations. That's the nature of a share. That's the nature of any commodity. Think about the price of breads, right? Okay, we can see that normally the price of bread has increased more than 300%, right? Price of fuel, the petrol, right? Okay, then we can see this up and down. Okay, then how we can identify that bar charts, right? And what are the indicators we can see and we can see in a bar chart, right? This is a single bar we have taken, right? We have taken from this chart, right? This is a single bar. Okay, you can see here, there are some, some parts, right? To the left side and right side, you can see some, some parts. Okay. Imagine that we have taken this one. Okay, we have taken this bar. Okay, I can enlarge this. You can see here, for a certain trading day, this is the open price. Imagine a certain company, imagine Sampath Bank. Okay, open price might be 30 rupees. Then This bar, this part represents the opening price of the day. Then this is the closing price of the day. Okay, very simple. So opening price, this is the closing price. This is the day's highest price. Okay, the share price touches the highest price. That price is mentioned here. Okay, this is the lowest price, right? Lowest price we observe during the day. Okay, this is called a bar, right? This is the bar charts is comprised with this type of up and down bars. All these the black color bars are, we call that bullish bars. The red color bars, bearish bars. Okay, can you remember what I said? Yes. In bar charts, every bar represents that open price, close price, days higher, days low price. Okay, very simple, right? This is called the bar charts, right? Okay, we can move to the next. Right, this is a bar open, high, low, close. So we got OHLC chart as an example, right? Right. Especially in a chart, we can basically identify some three very important, aspects. Three important, elements can be easily identified within a chart. Right. In the technical analysis, basic technical, we can see basic technical tools. Right. You can draw charts. You can see past price movements of a certain share, the equity or the any instrument. Then within that chart, we can identify different type of trends, price patterns, and indicators. Right. In technical analysis, basically we need to focus on these three very important areas. Number one is the trend lines. Number two is the price patterns. Number three, indicators. Right. One by one we can discuss. Right. Within a chart, we can identify trends, different type of trends, and some patterns, price patterns, and some indicators we used in a chart. Right. In a technical analysis chart, finally we can observe three things. What are they? Number one, the trends. Right. Number one is we can identify trends within the chart. Number two, different type of patterns, price patterns can be observed. Number three, different type of indicators used to interpret the market in a chart can be observed. There are three type of main things can be seen in a chart. When doing that technical analysis, we can basically use trends, different price patterns, and different indicators. Right. Without different trends, without identifying different trends, without identifying different chart patterns and price patterns, without using different indicators, right, totally different with each other, there will not be any technical analysis method. Okay, for a sound and perfect technical analysis mechanisms, these three elements are very important and catalyst. These are the normally important and primary matters in technical analysis. Let's move to the next slide. Okay, as I mentioned previously, we can identify different trends. We can identify different trends in a chart. Okay, how many trends are there? Yes, number one, we can see upward trends, some uptrends. You can see here. Imagine this is the price axis, this is the time axis. This is the price axis, this is the time axis. Right. In between that, between time and price axis, we can see some, up and down. Right. Imagine that this is a chart. Right. This is the time axis. This is the price. This is the price axis. This is the time axis. Right. Then you can see some, upward trend, then downward trend, upward trend, downward trend, turn up, turn down, up and down. Then you can see here the below. You can see that below level, the bottoms of that chart. We can draw a line. This is called a trend line, right? This is called a trend line. right? By the connecting the bottom point of the chart, we can draw a line. This is called the trend line, right? It's a trend line. It's a trend line. Okay. Then by simply looking at this trend, we can say that this is an upward trend. This is an upward trend. Okay, understood? Yes. Then here you can see here the continuous decline. We can see, we can observe, continuous decline in trends here. This is called the downtrends. This is a downtrend. Okay, we can have a line connecting all the top of that chart. Then we can see there clearly we can observe a downtrend. This is called the downtrend. In addition to that, we can observe, imagine this is the price axis, this is the time axis. We can see, that shares are fluctuating in between a certain price range, right? Imagine this is third line, this is 10. Then during a certain time period, this share the share was fluctuating in between those two price ranges, 10 to 30. Okay, therefore we can say that this is a trading range. Okay, there are two trends we can identify: upward trends, downward trends. Number 3, trading range. Okay, right. When you're talking about the different type of trading chart patterns, right? I'll clearly explain, right, by taking some practical examples when doing some analysis, right, at the end of this year, that presentations, right, programs, right? Okay, there are some trends we can identify, some patterns we can identify within a chart. Okay, number 1, head and shoulders pattern. Right? Imagine this is the price axis, this is the time axis. Now the price movement, you can see, observe now down, and yes, some significant improvement, then drastic drop, then small off, then decline. If you can identify at glance, you can see that there's some shape, head, then the shoulder, this type of, if you can observe this kind of chart pattern within a chart, right, within a chart, you have to carefully study whether there are any chart patterns or any trends we can observe in the chart. Because technical analysis, you can be an expert in technical analysis only by practicing, right? Only by practicing. Okay, that the Bruce Lee, right, he has practiced some shot for 1,000 times, right? Likewise, normally we have to practice. By applying these concepts practically, you might be one day, you might be a technical guru or technical expert. Very interesting, actually very interesting topic we can see in that, in this equity market, right? To be a technical analyst, right? Okay, this is the head, this is shoulder. If you observe this kind of pattern in a chart, right, then okay, then what would be the next reactions, price movement? There's a tendency for a drastic decline of price of the share. If you observe, you see a head and hold a pattern in a chart, okay, better you sell that shares what you're having, right? You have to sell and you have to wait for another decline and drop, and you can purchase the same share at a lower price. Okay, especially in technical analysis, as I previously mentioned, we need to know the entry point and exit point. There's a main aim of that technical analysis. Okay, how to enter, at what time, how to exit, and at what point, at what price. Then This is the head and shoulder pattern. Below you can see the opposite of that head and shoulder pattern. You can see the head below. Okay, this shoulder, other shoulder. The opposite of the head and shoulder pattern, the reversal pattern of head and shoulder. Okay, imagine you can have the, you can imagine that. You can have a hypothetical line here, hypothetical line, yes. This is the price axis, this is the time axis, price axis, time axis. Then you can see the price, small half, down, small half, yeah, big drop, then again half, big drop, then this is the price reactions. If you observe that the reversal pattern of head and shoulder in a chart was probably in after formation of this head and reversal pattern of head and shoulder, you can see a sharp increase of share price, right? Because I have been more than 15 years in the industry, then I know I have used these techniques because there's 95% accuracy in these chart patterns, head and shoulder pattern and reversal pattern of head and shoulder. Okay, if you observe this kind of reversal pattern, then share price move up, right? Then better purchase at this point and sell at a higher price within very short time period. Okay. Okay, let's move to the next slide. All right. As I previously mentioned, so as I mentioned that there are 3 types of charts, right? Number 1, bar chart. Number 2, the line, and number 3 is the candlesticks. Candlesticks are that very famous indicators we can use in charts, right? This is an example for candlestick, right? You can see here black candles. These are candles. This is the, we can see some drawing, red, white. Okay, those are candles. Those are candles. Okay, right. Basically, there are 2 type of candles. Number 1 is the bullish candles. Number 2 is the bearish candle. Number 1 is a bullish candle. Number 2 is the bearish candle. There are 2 type of candles: bullish candles and bearish candles. You can see here the bullish candle. It's very simple. You can easily identify, right? When there's a price increase for a certain day, we can see that closing price should be greater than its opening price. That's obvious. That's certain. That's certain that the closing price might be higher than its opening price in a good day, right? In a good day and up market, we can observe this kind of candle. That candles are called bullish candles. Understood? Bullish candles. Then you can see here, this is a bullish candle. This is the body of the candle. This is called the body of the candle. You can see this is the opening price of the day. Right? Sometimes you can get the 5 minutes, 10 minutes, or get 2 hours like that day. This is the opening price. This is the closing price. Okay. In a certain day, the opening price is, imagine that is a 10. This is the 12. This is the closing price. This is the highest price traded during that day. This is the lowest price traded during that time period. This is called the bullish candlesticks. You have to remember that the opening price is always can be seen in the below, then the closing price is at the above that the body of the candlestick. Okay, this is called the bearish candles, bearish candlesticks. Okay, in the bearish candle, the opposite, the opening price. Opening price, the starting price 10. Okay, the closing price, imagine that 5. Because that share price was declined, drop, right? Drop by 5 rupees, then the opening price 10, closing price 5. This is opposite. The only thing there was a difference between that bullish candlestick and bearish candlestick, open and close price. In the bullish candlestick, up market, open price is below the closing price. In the bearish or the drop market, then the open price is at high top, the closing price we can see in the below. Okay. Then candlestick charts is comprises different type of different size of bullish and bearish candlestick. This is an example, right? You can see here. Okay, this is the price movement, right? Every that the candlestick represent different opening, closing prices, high and low prices. Okay. Now we can move to the next. Okay. Within that candlestick chart, we can see, we can see clearly. We can see that the up and down, right? Then by connecting that bottom line, right? Bottoms of that chart, we can draw a line. This is called a trend line, right? This is a trend line. We call this a support line. We call this as a support line. Okay, this is a support line. Right. This is also very important. This is also very important, right? Slide. Okay, how we can identify support and resistance. How we can identify support and resistance. You can clearly identify these support and different resistance we can observe in a chart, right? Okay, from that other slide we can see that how we can apply these support and resistance in a chart, right? Okay, then imagine that this is the time price axis, this is the time axis, right? This is the price axis, this is the time axis. Okay, we can see here up and down, some plus, minus, negative, positive. We can see the share price movement, right? Up, then the down, up, down, up, down, right? Okay. Now you can see here, I have mentioned some, some point, buying point, buy, right? Can you observe, right? Up to a certain point, there are some, upward trends, right? After that, you can see the share price is fluctuating in between a certain range, between a certain price range. Okay, you can see here down, then up, down, up, then down. Okay, then up again. You can see different fluctuations, down, okay, up, down. Okay, at several occasions, several time periods, the share price came to a certain level. Okay, the below level, it went up, then came to certain level, again went up, came to that the previous level, or below that, near to that previous level. Therefore, this level is called the support level. This is called the support line. This is called the support level of a share. Okay, as I previously mentioned, everything depends, everything has a certain pattern, like it's like our life, right? Up and down, right? Like that. But within range, we can identify a certain pattern, right? Therefore, this is called the support level. This is called the support level. And above level, right? There are 1, 2, 3 times. We can observe that 3 times the share price touch its peak level, highest price. This level called the resistance level. Okay, that below that, this level called the support level, and upper level is called the resistance level. Okay, I think you are fully aware of that, support and resistance, right? Then when you see a chart, you can clearly identify supports and resistance level of the share. Okay, then when we see this kind of support level, when it comes to, when the share price of a share comes to that level, support level, we can purchase, we can buy the share, because we need to buy a share at a lower price. Okay, when it reaches to that resistance levels, mean that the previous high level or above, we can sell and book the profit. We can sell and book the profit. Okay, that is about the support and resistance, right? You can be an expert in technical analysis within few days if you can follow these things practically by applying these support and resistance in a live chat. Very interesting field, very interesting topic, right? It will enhance your competence, your rational pattern of investment thinking, right? Okay, now we can move to next. Now you can identify different support level and different resistance levels easily. Here it's clearly mentioned that we need to buy at these support levels and we have to sell at these resistance level. I can give some example, right? There are some type of customers, right? They can buy at low price, but they can purchase at lower price. There's no any, some, the psychological, sentimental attachment with that, buying price. They can price, yes. When there's a low price, yes, this is a good price, they can buy. But actually, it is the typical part in that, investment is that deciding the selling price. The deciding a selling price is a very difficult for an investor because he believes that, he continuously believes that the share price may move further and further, right? Because when there's a big profit, imagine that I can give you some, real world example. The Expo Lanka share, it was at 3 rupees before that 4 years ago. Then after that purchase in the share by the Japanese SB Holding and expansion their business into other countries and being a 12th biggest big logistic company in the world, right? Being that they are transporting goods and services, goods to other countries by using sea and air, right? Transport. Then it became a big company in the world, right? Then their share price went to 394 level within 1.5 years. Within 1.5 years, it came to 395 level, right? But there was some clients, right, who are having these Expo Lanka shares who purchase at different prices below 100, below 50, below 60, but they didn't sell at the peak price. They didn't sell at the peak price because imagining and thinking that their share price might move further and they may touch 500, right? But that is why I'm telling you that the investors are emotionally attached with the share. After purchasing, he would emotionally attach with the share. Then he then customers will start living with the share. Okay, but here as an investor, the only thing we need to realize in the stock market, we need money. The making money might be the main objective in investing in the stock market. Therefore, rather than depending and emotionally attaching with anything else, but to realize the main purpose of your investment, that is making money, right? Therefore, technical indicators may give a clear guidance to you to realize that the nature of the shares, but you can observe the previous and history of the share, then we can decide the different support and resistance levels. Okay, but taking high risks is actually is not a wise thing, but we need to take a risk which can be manageable, right, to your investment and to your investment amount, right? I think it was clear to you well how to identify the support and resistance level. Now we can move to the next slide. Okay, so far we have discussed some trends and some chart patterns, right? Can you remember that I told you that head and shoulder patterns, reversal head and shoulder patterns, right? Trends, upward trend, downward trends, and support and resistance levels. You can see all these things what I taught you, right? You can apply these, what you have learned in previous slide, and you can as a summary of what we learned, we can practically see those things and matters here. You can see here the support level, resistance, support resistance, right? The upward trends. You can clearly identify here head, shoulder, other shoulder. Then you can see the next reactions, next price movement. When there's this kind of creations of a head and shoulder pattern in a chart, I told you that there might be a sharp decline in share price. Okay, you can practically see in this chart. Yes, there's more than 95% accuracy with that this formation, head and shoulder price formation. You can practically apply these concepts, right? When you apply it and you are getting some experience by using and applying these patterns, right, by identify these patterns in the chart, right? When you observe 10 chart, this kind of head and shoulder pattern formation in the chart, right? Next time when you're purchasing the shares and by drawing a chart, right? When you observe this kind of share formation pattern, right? Then you might decide, yes, you can decide, yes, now I need to sell and we can purchase at a lower price. If you hold the share, right, although you know that there might be some decline, sharp decline after formation of head and shoulder, but you might think that no, I have to wait, right? I keep my share, but it might be your own decision, right? But as a trader, investor, right, if you can sell at this level and if you can purchase at a lower price, then there is a gain. So you can purchase and you can purchase more shares. If you sell at this point, then you can purchase re-enter because you know the company. Company might be good. Because of this kind of price reaction, maybe due to many reasons, macroeconomic factors, political issues, right? Other negative circumstances we can see in the economy, right? Due to those reasons that we can observe these price reactions, right? Therefore, it's better because as I previously mentioned, this is also a certain pattern, no? The rhythm. We have to follow the rhythm. We have to follow the rhythm. Then we can sell at this point and we can re-enter at this level. Then when you sell the 10,000 shares, you can purchase here 15,000 shares. Then you can increase the number of shares quantity of your shareholding. Okay. Next time the company, when the company announces that dividend, you can enjoy that more dividend because if the company announces 5 rupees per dividends, then if you hold only 10,000, now you can see you are having 15,000 shares, then 5 into 15, you can get the 75,000 dividend. But if you have decided not to sell but keeping 10,000 shares, but you have to wait another recovery, right? Another recovery, but only holding that 10,000 shares. Okay, I think that nothing you are fully aware of this matters what I mentioned, right? What I said. Okay, now we can move to the next slide. Okay, head and shoulder patterns, as I discussed, the before and after the price movement up and down. Yes, head, the shoulder. This is the yes. This is the formation. This is the formation. This is the after the formation of head and shoulder pattern. You can see here, decline. Right? I would like to say again and again that this pattern is there's a 95 accuracy, 95% accuracy can be seen, and because I can underscore that because of my experience during that 15 years in equity market. Okay, another example. You can see the price movements. You can see here the green color lines and yes, pink color lines. Those are that moving averages, short-term moving average and long-term moving averages. Right? This is a head, the shoulder, in the decline pattern. You can see here. Right. Inverted head and shoulders, the reversal pattern. As I mentioned, reversal pattern. No? This is a practical example. You can see the chart up and down, the price fluctuations of the share. You can see, yes, head, shoulder, shoulder, but reversal pattern. You can see the head below the chart. No? Reversal pattern. When you observe this, as I mentioned, previously mentioned, we can see that sharp increase in the price. Sharp increase in the price. Okay. If you observe, and if you have purchased these shares and having that shares in your portfolio, then if you observe this kind of thing, right, formation of reversal pattern of head and shoulder, better keep the shares, right, and wait for a certain time period to increase the price to next upward level, upward trend, and you can dispose at a higher price. Right. Another example, double tops and double bottoms. Okay. This is also another chart pattern we can observe, right? Double tops and double bottoms. Those are, chart patterns. Okay. This is similar to the head and shoulder pattern, but there are only two top, two bottom. But in head and shoulder, we can see that top and lower top, two lower tops, right? But here we can only see that double top. This is called the double top. This is called a double bottom, right? If you can identify this kind of price pattern in a chart, right, then I'll explain what would be the next reactions, what would be the next price behavior, right? When you observe this double top, you can see that this can imagine that this is you can draw a hypothetical line, right? Yes, this is the price line, price axis, this is the time axis. Now you can observe the price movement of sharp increase, sharp drop, sharp increase. Yes. Then double top is formation is completed here. This is a breakout. Then we can see the drastic decline, right? When we observe this kind of double top in a chart, then better you sell the share and re-enter at a lower price. Okay. Then the opposite of that double top, this is a double bottom. Yes. Draw a hypothetical line there, price line, price axis, and that this is the time axis. Yes. Drastic drop. Yes. Small recovery. Drop. Then second bottom is completed. Then double bottom formation is completed at this point. Then we can see drastic improvement in the price. Drastic price improvement we can observe, right? Now when we see double top, that pattern formations, then next we can see drastic that significant price improvement in next few days. Okay, when you observe this kind of double bottom, yes, keep your shares with you, and if you can buy, and increase your number of shares and wait for a few days, and you can sell at a higher price. This is called the double top and double bottom. Those are different chart patterns and very famous chart patterns we can use to interpret the future price of a share. We can move to the next slide. Right. Double top, double bottom example, right? You can see here. Okay. Here we have drawn a support line of different of the supply share price fluctuations we can observe, right? You can observe. Okay, we can observe decline in trend. Then we can clearly observe here. We can clearly observe here. Wait. Okay. There's a power cut in our area, there, right? But luckily I connected with a dongle, right? Because I know that exactly this time is the power cut time period. Then I connected with my the portable internet connection. Okay. Double bottom. As I mentioned, that we can practically apply this double bottom, right? Bottom, another bottom, you can see the double bottom, right? Here. The next price reactions, as I previously mentioned, we can see the significant drastic, significant price improvement can be observed. This is called the breakout level. You can see here that in the blue line, this level called the breakout. You can see a breakout here, then significant improvement, drastic improvement in the share, right? But one day one thing you have to remember, right? Everything depends on customers or the investors' sentiments, right? Okay, there are some positive, negative sentiments, right? For positive sentiments, there are a lot of factors behind with the positive sentiments of customers. Social economic conditions of the country and political stability and economic recovery and the continuous economic growth, right? And increase that foreign reserves. Those matters, macroeconomic matters, may give some energy to create a the positive sentiment of customers or the clients or investors. Opposite side is the other way, right? When there's no political stability and economic crisis and no any proper plan in the country at that time, like these situations, we can see them there's no any that significant improvement, but we can see some sluggish, and the investors are they are having the wait and see strategy in the market. And when there's a recovery, most probably that one thing I would mention that because the country is in a big crisis, it's a dollar crisis. So most probably that by 8th of the August next month, most probably that your top level agreement might be reached by the Sri Lankan government with IMF. Most probably the IMF funds might be available to Sri Lanka, right? Thereafter, the other lenders may do that may lend something to country, even China, right, and Japan. Then thereafter, I think after the middle of the August, right, we can see some recovery in the economy, and main burning issues might be evacuated from the country. Main issues like fuel and other energy crisis, and gradual improvement might be expected in the economy, right? Because although we are using that past price movement and past price patterns when to analyze that when in technical analysis, but macro factors and other happenings and that matters we can see in the environment have to be properly adjusted with that technical analysis, the practices, right? Because it means that we can't totally depend on with that technical analysis or fundamentals, but we have to use technical analysis and fundamentals as a mixture. We have to blend them, right? We have to blend the technical analysis and fundamental analysis, in informations, and we have to have a mix of them, right? We have to use both, right? Right. Next trading patterns, we can see triangles. triangles. Then don't remember about that double top, double bottom, and head and shoulder and reversal pattern of head and shoulders. Don't forget, right? Keep in your mind, right? Now we can discuss about triangles. Okay, there are three types of triangles we can observe. Three types of triangles we can observe, right? Number one is the ascending triangle. Ascending triangle, you can see here. Okay, we can draw that price line and the time axis here, then up, and down. By connecting upper lines, we can draw that the resistance line draws resistance below, connecting the below the bottom, we can draw the support line. Then we can see and we can observe this triangle. Okay, there we can see there's an upward trend, no? Upward trends. Okay, this is called the ascending triangle, right? When you observe an ascending triangle, okay, then share price may move up, right? Ascending triangle. This is descending triangle. These are the resistance. I know you are familiar with that resistance level. No? This is a resistance top level, the bottom level. Now we can clearly mention, you can clearly identify decline trend. No? Decline trend. It's called the descending triangle. When we observe this kind of triangle, okay, then there might be, next price reaction might be the price declining trends, right? Symmetrical triangles, two types. You can see here. Sometimes that symmetrical triangles, there might be uptrends, there might be downtrends. Okay, it depends on support, depends with some other factors also. Okay, but we have to cross the monitor. Okay, see, in symmetrical triangle, there might be some uptrend or downward trends. I'll briefly explain in a slide how to identify that, different type of triangles and the next price reactions. Okay, that is about that, different type of triangles we can observe in a chart. This is also another chart. Right. Here I have that used that everything we learned in that, in previous slides, right? You can see everything here. Supports, resistance. You can clearly have this. You can clearly draw this line. Support level, the resistance level. Then double top, double bottom. Just you can see double bottom here, right? Then price increase, because what we have learned, right? Then you have to apply those learned things, right, in a chart, right? Then you have to be a good observer, right? Then you can be a good trader. So you can be a good trader. You can take quick decisions, quick buying and selling decisions, and you can have quick buck, quick sum, right? Quick money. You can earn quick money while trading, while identifying these techniques. Okay. Then here you can see the descending triangle. You can see descending triangle. Okay. Then downtrends. Okay. We have to apply that what we have learned, right? In that in theories. Right. So far, I have discussed about different chart patterns, different trend lines, right? Then we have come to the next level. We have come to the next important area we can discuss in technical analysis. That is called that that area is called that the applying that different indicators, applying different technical indicators, applying different technical indicators. This is one of that indicator, one of that indicator that is called the MACD, right? Moving average conversion divergence, that is called the MACD, right? That's very simple, although that those are the technical version, technical some terms right to use in developed country, but only thing you have to get that basic idea about these indicators. That's enough to understand the basic develop technical analysis. MACD. Okay, MACD. We can see how practical, right, of that MACD. Okay, you can see here the chart price movement of a share. You can see here. This is the long-term moving average. This is the short-term moving average. Okay, you can see here the chart price movement. Below you can see here. Right, there are two lines. Those are called signal lines. Those are called signal lines. This is the original share price movement here. Above you can see the original share price movement here. Below the MACD indicator. Right? In other part of the presentation, I will explain how to practically apply these indicators. Right? Here you can identify that there are two lines. Those are the signal lines. You can observe. You can observe the price movements, and you can observe that MACD movements. You can see here there's a higher price. No? Then what's the reaction of that MACD? This is called the signal line. This blue line, that blue or the dark line is the signal line. Short-term moving average. This is a long-term moving average. This is called that other line, long-term moving average, red line. You can see some certain pattern. No? When that signal line intersect the red line at a certain point, okay, and thereafter it move off, and again it came to a certain level and intersect the red line. Again we can see here, and we can observe here again that that blue line intersect the red line. Okay, then how we can identify the entry and exit point, or the buy or sell point, by using this MACD techniques. By using this MACD techniques, how we can use sell signals and buying and selling points. You can see here the share price at this level. You can see the higher peak price. No? There's a higher price. You can see this level is a peak price, peak level. Then here we can observe here. We can compare this peak level and the signal line peak level. Okay, when this signal line intersect this at this point, right, better to sell. You can sell at this point, right? When this black line intersect with the green line, red line at this point and below, you can sell. At this point, you can sell. No? You can sell here. Then the share price, we can see, observe then the drastic decline of the price. Okay, drastic decline. If you're unable to sell at this level, but what happened? What happened? Then you have to wait, no? Because we have purchased at a higher price, but you have not realized your profit. Then you have to sell at this point. At this point, you have to sell. Then again, this signal line intersect the red line. Long-term moving average. That at this point, we have to buy. You can see the price here, this level. Then there's a drastic decline at this level. You can purchase at a lower price again. You can purchase at this level. Then we can see the upward trends. Then again At this level, you can sell. Then how much you can realize? Right? You can sell at a appropriate price, and you can re-enter at a lower price. Then at this level, you can realize another gain. Okay, there is the MACD. There's a MACD indicator. That's the MACD indicator we can use. Okay. Right. Can move the next slide. Okay. Now we are discussing about different type of indicators we can apply. We can apply in technical analysis, right? Different type of indicators. Previously I discussed about then MACD. Now I am talking about another very important and very accurate and very commonly used index, that is called the relative strength index, RSI, relative strength index. Okay, I'll explain how we can use that RSI, right, indicator in technical analysis. You can see here this is the price pattern, right, chart, right? Decline, then half the decline. Okay, trading within a range on a decline, again up. Okay, then RSI indicator, right, represent, right, it is having two lines. This is the RSI, this is the RSI, this is the 70 line, this is the third line. There are two lines, two levels. This is the below, you can see the 30 level and 70 level. RSI indicator always say that the share price along with the share price movement, when we link that RSI indicator, we can observe that the share price is moving in between the 70 and 30 line. You can see the original share price movement fluctuations. Below you can see up and down. Below you can see up and down. Okay. Okay, then here we can see a drop in the real price now. Then this is the MACD indicator. Below part is the MACD, right? This is the original price pattern. Then here we can see the decline. When there's a price decline, drastic price decline, we can see in the RSI, relative strength index, it touches the third line. It touches the third line. And again, when there's an improvement in the price, we can see in the original chart, then RSI chart also that follow the same. Then it touches the 70 line, above line, and above the 70 line, we can see some changes. Thereafter, then we can see it follow the original chart pattern, right? When the decline, then also the RSI also decline and touches again that 30 line. Again, there's a small improvement. Then the RSI also follow the same sharp trading pattern. Again, it touches third line and came below the third line. At this point, you can see a significant and drastic decline in the share price. Then RSI also decline. Below it is third level. Okay. Again, it improved to 70-11. Is followed that in a parallel to that, the original share price movement chart, we can observe that it moved to 70. Always that RSI movements can be seen in between the 70 and 30 line. 70 and 30 line. Then how we can identify entry and exit point, the buying point and selling point, right? Because as an investor, we exactly should know how to purchase at a correct price, how to sell at a correct price. We have to purchase at a right time and right price. We have to sell at right time at right price. Okay, because actually there are many customers, but in the stock market, less than 30% investors, they get the maximum benefits, because other 70% they don't study. They don't study the market. They don't study technicals. But if you can study the fundamental and technical analysis, then you can actually create your wealth within a short time period rather than other people. Because knowing something is better than unknowing, right? Without knowing, you can't get anything, right? You have to know something, right? When you do something, right? When you do something, you have to learn, right? What's the best way of getting right thing done superbly? It is because you have to learn what you have to do, right? Learn by heart what you are going to do, then you will succeed, right? Okay, then every time this RSI touches 30 or comes below 30 line, then you can buy. This is called oversold level, because RSI came to that 30 or below 30 line because of panic selling, right? Therefore, we can purchase at a lower price. When we see this level, below that RSI 30, we can here see the lower price. We can purchase, we can buy. Then at RSI, when it is at 70, this level, we can sell, right? Where you can buy here, this level. Then when it reach to the top, we can see the RSI above 70. We can sell. Again, we can buy at this level, and we can again sell. We can buy, okay, sell. We can buy below 30 and sell above 70. Very simple. Right, in a Sri Lankan market in context, that RSI indicator, right, is a 95%. That accuracy can be seen with that, accuracy can be given to that RSI indicators, because I'm also normally I'm also using this indicator, right? Often, right? So far very successful, right? Because there's a 95 of accuracy can be seen with that. Successfulness can be seen with this indicator, right? Okay, we have moved to the next. Okay, that is about that, technical analysis, the theories, right? That is about technical analysis theories, and practical aspect can be discussed after the after a short break, right? Okay, I would like to give a conclusion, so the summary of that what we have learned in theory. Then next part might be the very interesting part, because also how we can use that technical analysis that learn things, right, practically in charts, right? That will be with that the programs, right? And we can come back, right, within a few minutes, right? Within 10 minutes, right? We can have a short break, right? 10 minutes short break. Thank you for your patience, because there was a power cut. Then I got around 15 minutes break. No, I said but 10, but I normally like that work for the time. Right. Okay. Right. Now we can start the practical part of the technical analysis program. Right. You also can apply this thing, right? In that you can see here. I think can you see the shared screen? I think you can see the shared screen.
Yes, sir, we can see.
Okay, thank you. Okay, investing.com, right? These are very famous, international investing platforms. We can see, right, by using this investing.com, right? Remember this name, investing.com, right? You can easily type on Google and type investing.com. You can get this slide, right? You can get this page, right? Web page. Then investing.com comprises that normally it gives every information related to the financial market and commodity market. Investing.com, very famous investment site which provides every information which required to investors to take sound decision, because we can analyze any share in the world, right? That's the most important aspect of this by using this investing.com, because other than depending on that trading software given by broking firm, right? I'm also using this investing.com because it is timely updated website, right? Therefore, we can analyze and we can monitor prices and price movements of commodities like gold, crude oils, cotton, copper, silver. In addition to that, we can monitor and analyze that prices of commodity that not only commodities but also that prices of equities, right? Shares, right? We also can analyze that price of Apple company and Facebook, right? You can have your own analysis, right? Now you can, by using that investing.com, I would like that. So how we can use this investing.com site to analyze stocks in Sri Lanka Colombo Stock Exchange, right? You can here type deep product. Or you can type Haley's, right? Right, Haley's. The company Haley's, that's a very diversified conglomerate and very diversified entity in Sri Lanka, right, managed by Dammika Pereira. Business tycoon Dammika Pereira, right? Then that Haley's company has some subsidiaries and some associate companies. We know that the valuable one, Royal Ceramic, Haley's Export, Haley's Fabric, right? Those companies, right, under that Haley's management, right, belong to the Dammika Pereira. Therefore, Haley's company is very good company with its sound fundamentals, right? Fundamentals with the earning per share, net asset value, and with that all other fundamentals ratios, we can see that Haley's is a good company. It's a good company which gives good dividend yield to, right? Then how we can analyze that company? Okay, here you can get that Haley's PLC. You can see the 73 rupees. This is the last trading price, 73 rupees. Okay, now you can see here, we can get the technicals here. You can see general charts, financials, technicals. Okay, I'll click on technical. Right. This is the summary of technical analysis given by that investing.com. Right. If you are not, familiar with that technical instruments, right? If you are not familiar with that technical indicators, right? Used in that technical analysis, but you can simply go to that investing.com and you can type that, company, and you can get these technicals. Okay. And at glance, you can see that strong buy, Haley's company. This is the recommendation given by that investing.com. Moving average buy, technical indicators, strong buy. Then take Haley's company, now it is trading at 73 rupees in Sri Lankan in Colombo Stock Exchange. Then you it said that the Haley's is a good buy, strong buy. We can see here different indicators, pivot points, classic Fibonacci rearrangement, different type of technical indicators there. Pivot point, then resistance 1, resistance 2, resistance 3. Likewise, we can see RSI 66. It is a good buy. Stochastic RSI buy, right? A different kind of other indexes, ADX, right? Bull and bear power buy. Then final summary of the technical indicators. By using this investing.com, right? You can get a summary. These informations are given by that investing.com, because the system itself analyze and give some some summation of technical and fundamental values to the customer. Anyone in the world can freely log on to that freely log into that investing.com, and you can analyze the any share. Okay, this is the Haley's company. This is a period moving averages. We can see different period moving averages. Moving average 5, 10, 20, 50. Normally we use moving average 20 and moving average 50. I'll explain and I'll show you that how we can use the moving average in charts. Then technical analysis, recommendations for the Haley's, right, is positive, because if you can purchase the Haley's PLC, Haley's company today at 73, in between this level, within this price range, probably I'm sure that it may touch 100 within next 2-3 months. Sometimes we can't exactly mention this time period, but there's a probability of reaching that Haley's company 100 very soon, right? Because there's a strong buy recommendation or technical buy recommendations for the Haley's company. Now we can see how we can use Haley's company's price chart, right, for the last 1 year, and how we can interpret future price of the Haley's company. How we can use this investing.com to get charts? It's very simple. You can click here, chart. Then there's a streaming chart option. We can click here. Have to wait 2 seconds until the charts disappeared. Right, it came. Okay, this is the chart of the Haley's company, Haley's PLC. Okay. This is for the last year, right? This is a price movement during last year up to now, right? Including today. Then we can see this is a price movements. Now, I can you remember I have mentioned that there are three types of charts. Line charts. This is called line chart. Then bar charts. Then this is the candlestick chart. You can easily get that. If you need the line chart, yes, you can click on that. Then this candlesticks, then bar charts. Right? I'll use that candlestick because that's the very easiest chart patterns we can identify, and we can interpret very easily with these charts, with these candlesticks. Okay. This is the price movement of Haley's for last year. During last year, these are the improvement and decline of the share price. We can see here in 2021 August 16th, the share price was 74. Share price was 74 last year, right? You can see here last year the Haley share price was on 70th of August. Their share price was 74.5, right? 74.5. Okay. So you can see here during last year, yeah, you can see here that we can draw a line here, right? We can draw a line here by connecting that lower bottom lines. Can you see this? I think you can see this. I draw a trend line here, right? Connecting that lower, the bottoms of the charts of the Haley's, right? From here to this level, right? Okay. This level was a support level for a certain time period. During last year, this level was a certain support level. I'll format this scale style. Okay, now you can clearly see that that support level during last year. The price was 70. The price was 72. This is the 72 support level we observed during last year. Okay, this company, right? Then what's the current price? What's the current price? Right? That's also that we can see that today's current price 73. Today's share price is 73. The share price of the Haley's now it is at 73. This is the today share price. Okay. Then during last year, that share price was the support level for the Haley's, right? Support level for the Haley's. Then when you observe these price movements, right, and by comparing this previous year price of the Haley's with that current year price movement, right, we observe that this line, okay, this line might be a critical point, critical trends line for the Haley's, because during last year it was a support level. Now Haley's during last few months it came below that 73 level. Now today is touched 73 level. It is equal to the previous year support level. Then we can expect price movement. We can expect a breakout from here, and we can see a improvement in share price of Haley's from 73 level, and most probably it may touch 100 very soon. Right? How we can say that it may move to 100? Also, that how we can draw support levels and resistance levels to the Haley's company. Okay, can you see during that last year, we can see some support level here, right? Can you remember? Sorry, can you see this level during the we can exactly mention the time period? Yeah, 21st of 9th 2021. The share price was 98, right? In the 2021, the November 25th, the share price in between that level, in between, yes, 95 to 100. We can draw a trend line by connecting this support level of previous years, and we can extend this line to the price axis. Okay, then there was the price here. We say 95 rupees. 95 rupees. Okay, then we can format this. We can use different color. Yes. Right. Then this is my prediction on that Haley's company. Haley's is actually the fundamental sound stocks, by giving a reasonable dividend yield to the customers. Its return on equity is high, and earning per share is high compared with the other company, right? Price and ratio and price to book value is very attractive, right? Then I can say that I can predict that within very short time frame, within maximum, right? Maximum within 2-3 months, right? Time period, it may move to 100, 95, then 100. The next trend line can be drawn as this. You can see here. You can draw this line like this. Right. Okay. This is how we can draw trend lines. How we can draw trend lines, right? Then how we can use that technical indicators. Is there any that that trends we can identify? You can see here, the support line, resistance, support and resistance. Okay. The resistance or the support line one day might be a resistance level in another time period. That is why I say that previous year the support line might be touched by the Haley's company in this year, because normally we know that history repeats in stock market. History repeats in the stock market, because this price decline and downtrend was due to macroeconomic issues, not with that fundamental issues of the company. Not with the fundamental issues of the company. Okay, then we can say that by drawing this trend line, we can say that the share price of the Haley's might move 95, 100 level within next 2-3 months. Okay, within this next 2-3 months, in purchasing the Haley's company at 73 is worth, right? And if you can purchase at 73 and wait for few months, you can sell at 95 or above, right, in the history, but it has moved to 150 level, right, in 21st January 2022, right, it moved to 150, this peak, then again came to 50, right. Then these price reactions, price movements can be observed during last 6-7 month, these price movements. Now it is at this level because at the we know that exactly that the Sri Lankan economy at a certain junction, right? Probably we get that IMF facility and other supports from other countries like China, Japan. Probably we may come out of this crisis, and then the market might be normal, right? Then the share price might move up to that this safe level, 95 level and 100 level, right? It's still a good price to enter. We can purchase at this price. Then how we can use that indicators what we learned? Okay, we can write on this. We can write on this chart. Okay. Then insert indicator. Also again, we can click on this chart. Then insert indicators. In insert indicators, there are hundreds of indicators we can use, right? Can you remember the indicators I have mentioned here? RSI, MACD, right? Those are the famous indicators. In addition to that, there are some other indicators like Bollinger Band, parabolic SAR, right? Moving averages, right? There are a lot of that, we can see that some indicators, moving average cross likewise, but the moving average channels, likewise, we can use different indicators. There are hundreds of indicators we can apply. We can apply in technical analysis for a better understanding of future price movement of a certain share. Okay. Now I can use that very famous indicator. That is the parabolic SAR. Parabolic SAR. Okay. Okay, can you see these cross marks here? Right? Parabolic SAR. This is called the parabolic SAR. You can see here. Sometimes that parabolic dots appeared above the candlesticks, and sometimes we can see that parabolic dots below the candlesticks, right? Okay, you can carefully monitor, right, these candlestick above and below the candlesticks. Okay, can you remember? Can you that monitor? Okay, parabolic SAR suggests that when the parabolic candlesticks appear, right, appeared below the candlesticks, it is a good buying signal, right? When the parabolic dots are appeared above the candlesticks, right, it indicates and it suggests to sell. You can see in this decline market, you can see that the price decline trends. So we can see some decline in price. Then at that moment, we can observe that parabolic SAR dots are above the candlesticks. Then we have to sell. Okay, you can see here, after certain drop of the share, then parabolic SAR dots are appeared below the candlesticks. You can see here. Then these points at this, if you see 2-3 parabolic SR dots appeared below the candlestick, then you can buy. You can see if you buy at this point, there are some there's an improvement, no, of share price. Again decline. When there's improvement, you can see that the dots appeared below the candlestick. Again, it appeared below the candlesticks. Then now, what are the conclusions? Right, after applying this parabolic SCR, we can say, then I suggest that this Haley's share might move to 95, then 100. Right, in between it may move to a certain level, right? We can get in between, we can draw another line, right? For example, we can draw here another line. Yes. Connecting a certain point, right? Within the channel. Okay. Now 73, and it may move to 80 first. Then to 95. After consolidating that share price at this 75 level, then at 80 level, after consolidating, and now we can see we need some certain volume, right? Number of shares traded during the day, and if we can see that improved share volume, it will be a support to the market. It will be support to the share price improvement. Then to 90. Okay. Then parabolic SCR, okay, then we can say that yes, according to technical analysis, by using parabolic indicator, it's a good buy. It's a good buy. Okay, what are the other indicators we can apply? Right, now we can click again, right click here, then insert indicators. Then MACD. Can remember MACD. Okay. I say that MACD, there are two lines. When the that blue line intersect the red line and came down, right? Then this point we have to sell. We have to sell this level. We have to sell. Then again we can buy at this point, and there's some improvement. Again, this point you can see here. Then MACD. This is the MACD indicator. We have applied this MACD, right? Then we can see here that the blue line, the signal line, intersect red line. Then at this point we can sell here, right? And wait for a while, and then it again that intersect at this point. Then we can purchase at this point, right? We can purchase at this point. Then it move again, right? At this point we can sell. When it again came down at this point, when it intersect this point, we can sell. There's a decline, right? Now we can see that there's no any turning in that MACD. No, there's still upward trends. There's no any turning we can identify in that MACD. Then by applying MACD, that MACD, that the signal line may improve further. Then it's also a good indicator. Yes, MACD also give some buy signal to the Haley's. Okay, then what else? Yes, we can apply other indicators. We can remove that volume indicator. Then we can right click on this chart, then insert indicator. RSI, relative strength index. RSI. Okay. You can see here, I applied RSI indicators to the Haley's chart. Okay, we can get an idea. First learn the history, the previous price, the behavior during last year. Yes, we can see here. You can't have a comparisons right, with that original share price movement and the RSI movement. Below we can see RSI. As I mentioned when introducing the RSI indicator, there are two lines. This is the 70 line, this is the 30 line. This is the 70 line, this is the 30 line. Okay. Then at this peak, you can get an idea. At this peak, the RSI of the share, how much? It was 79. You can see here below in the RSI line, the figure value is 79. But we know that normally a share is moving, RSI indicator moving, right, in between 70 and 30 line, right? Okay. Then above the 70, if a RSI of a certain share, right, move 70 or above 70, it means that its relative strength is high. Then we have to be very much careful because these levels are selling points. When a certain share RSI moves above 70, better sell. It's better sell. We have to sell. Okay. When it came down again, you can see here. At this point, we can see here the original share price was 49, 50, just 50. Here the 50. The lowest level we observed during last year, 50. That is on 28th of April. The share price was 50. What 49? Yes, 50 rupees. Okay. Now we can see the 50 rupees, and you can see the below the RSI. It indicates 18th, right? 18. No? This normally RSI moves in between 30 and 70 line. If it comes below that 30 line, it means that this is a panic situations. The investors are selling because of their sentiment, negative sentiment, and over sold react situations, because they have overreact to the real situations. They have sold at lower prices, right? This is a drastic drop. Then if we can purchase at this level, you can compare this original share price movements and the RSI price movement. Then in the RSI, it says that it's below 30, you can purchase. It's a good entry point, right? Then we can observe that improvement. Now we can hear today RSI 65. RSI 65. Right, RSI 65. Here RSI 79. 79. In history, it has touched 80 level, no? 80 level. It has touched during last year. December 17th of December last year, it moved 80. Now 65. Then there's a room for the Helix company to move this RSI to above 70 and near to 80. It means that the share price may move up to this mentioned level in coming months. That is my predictions. Then today also I have purchased some shares for my customers at this level, and even I have purchased some shares at 50 also during during the April time period. And then today also I purchased at 73 level. And during last week I purchased at 76, 77 level. Now 73. I'm sure that I'm fully confident that the share price moved to 80, then to 93, and within 2-3 months it may move above 100. Because this is a good company and fundamentally backed and fundamentally sound company, and also these technical indicators give some buy prospect, right? Then we can say the Helix is a good buy. Helix company is a good buy. Okay, we can apply. There are different type of indicators we can observe here, right? The trend lines, okay, channels, long positions, short positions, price range. We can draw some price range also by using the chart. Technical analysis is it's like a, it has different indicators, right? Sometimes after using this technique for few months, you might be right addicted to that technical analysis. It means that you can earn more by buying and selling shares, right? Especially one thing I just mentioned here. Normally, long-term investors, they use that fundamental valuations methods, right? Because they only focus that fundamentals, right? They are not focusing that technical, but they only think about the dividends and the earning per share and other net asset value, that those kind of fundamentals, right? They purchase at lower price and keep those shares, good shares, for 2-3 years. Actually, that is called the investment, right? But if you are using the technical analysis indicators, technical analysis tools, because technical analysis tools are used by short-term traders. You don't need that wait, right? More than 1 year, but within a day also you can trade within a day. If you can purchase, if you can identify a certain buy point, you can buy today and you can sell at the higher price today itself. You can book the profit. For example, if you purchase a share at 70 and you can you can sell at 75 within a day. Sometimes within 5 minutes, 2 minutes, you can sell and you can book the profit, right? Therefore, that kind of opportunities are available in the stock market, right? But you have to be with the market and you have to live with the market, and there are a lot of avenues to earn money, and quick bucks, quick money can be easily, right, taken from the market. The market is like a ocean, but we have to take some, right, 2-3 buckets from the market, right? There are more opportunities, but you have to learn, and because since that you are in that financial, sector, right? Commerce. The following subject is commerce streams: management, finance, banking. But we have to be with the market, because financial literature in the country is very low. But there are some bankers, but they don't know about the market. They don't know how about the market. There are some even private sector bank managers. When I met, they have said that actually, Dammika, I don't know how to trade in the stock market. But I say that normally you have to be with the market, because how you can give some insight of the economy to your customers, like us. Therefore, that our literature rate is high, right? It's near to the Japan, right? Literature rate, but financial literature is very low, right? You can see that the number of accounts, CDS account in the Columbus Stock Exchange, right? Very low. But there's some gradual improvement, right? You can see some improvement in Columbus Stock Exchange, and that activities there, people are opening, especially the young generation, young people, they are opening accounts, CDS account, and because they know how to use that apps and softwares and how to analyze, because everything is available in that YouTubes, and there are different type of as I mentioned, that investing.com and Bloom, that kind of business that websites are available freely for any investor, any person. They can easily get informations, right? This kind of price range also can be drawn, right? That is about Haley's company, right? Okay, now we can move to another company. We can remove that other indicators. Then we can apply this chart for another company. How we can apply? So here you can type dip product, dip product fields. Right. Can you see this candlestick chart? This is the dip product. I'll give a summary of the deep product company, right? Because we should know that the fundamentals and the nature of the business of the deep product. Deep product company is also a company, right, managed by Dammika Senarathne under Haley's Group, right? Deep product. This is the company which provide right 5% of that the world non-medical hand gloves requirement. The 5% from the world requirement is provided by the deep product. That is in Horana, right? Okay, previously it was at a Mycounsellor. You know, there are incidents. There was a person murdered in that area, right, during the Rajpaksa regime. Mycounsellor. Later, the deep product factory, right, you know, shifted to that Horana area, right? Deep product is a export-oriented company, right? They normally provide 5% of the world requirement of non-medical hand gloves, and there's some part of producing medical hand gloves also, right? Then they earn dollars. They earn dollars, right? Then we know that due to that rupee depreciations, they normally generate more profit, because when they convert $1 for you know, 1 year ago, that rate was around below 200. Now 370, 367, right? Then without changing their, you know, revenue in dollars, but they get more rupee values, right? Therefore, they record a big amount, big profits in rupees. Therefore, that is the importance. That is why we need to focus. We need to purchase. Haley's also, there's another. There under that Haley's, there are some, you know, export companies. That's why we are focusing that the export companies and dollar earning companies, because at this situations, the Sri Lanka required dollars. Therefore, that dollar earning companies, they are getting more benefits with that dollar rupee depreciations. Okay, now we can see here deep product PLC. You can see that this is the current price, 30. Today, share trading price was 30. Deep product 30, right? You can see this is the 30 level, right? Right, let's move to the last year. You can see the price movement, the product price movement last year. You can see here, right? August, September, 1st of September last year, the deep product share price was 70. You can see here 70, right? 70. Okay, then it came down, right? Then we can see here in April 27th, right? There's a decline in the all share index, big drop in the market. Then this point, it came to 20. It came to 20. You can see here RSI below. You can see RSI that is 16th, right? This is a 30 below 16th. Below 30 mean that that's a good buying point, right? You can simply apply those things, right? Then you can, if you have purchased this share at this level at 20, now you can see 30. Then 50% return, 50% return for that time period for 3 months. For 3 months, there's a 50% return, 50% return. But if you put that money in the bank, you can get enjoy around, now enjoy, you can get that 20 or 21%. If you put it in FD, that may be around 25. Now some 3 month stable rate, normally it is around 32, right? Near 30, right? 50% return if you have purchased at this level, right? Now we can see here, this is 30 level. Then as I previously draw some charts, how we can draw some lines for the, you know, trend lines for the deep products. You can see here some support level during that 25th of February, and here 9th of May, sorry, March, 9th of March. And we can draw a line here, trend line, connecting this point. right? Here we can observe that during between February March, right, this 35 level was support levels. 35 level was support level. Here we can draw a line here. This is the bottom. Right. Right, this is the bottom, recent bottom, that is 23 level. Say that 23, right? Okay. Now we can say that when it's come below 23, right, you can purchase, because now we can say that when there's any crash, right, any crash in the market, when the dip product came down below 23, yes, definitely we have to buy, right? We have to buy. Then now it is at this level, 29, 30 level, right? Then due to that recent trends and positive impact from that dollar depreciations and some buying pressure we observed during last week, we can see can you see these candles all are in green colors. All are in green colors. Green candles represents bullish candlesticks. Bullish candles mean that in every day we can see some improvement. All these red candlesticks represent that drop markets, days where price decline, right? These are drop surprise drop days, right? The red candlestick, then green candlestick represent that price appreciations of that respective dates. Okay, then we can see that the bullish candles formation and some candles continuations, bullish candle continuations. Then I hope that it should move above 30 and it may touch 35, right? If the trend continues, let's move to 35 level, right? Then we can have another resistance level, right? We can see another resistance level by using this chart. Very easy, but we have to, right? We can draw another resistance level here. Okay, this 35. Yes, this level can be taken. This level can be taken as next resistance level. As next resistance level, right? Then this level may be the support level, then this may be the next resistance level. Okay. And actually that we can draw charts and we can mark as this, right? Okay. So using arrows, right? Okay. When I tell something to my investors, my customers, then I should give some, facts. No, I should say some facts. And after drawing this kind of chart, right? Normally, I'll send those details day by day to my network, people, investors. Then after looking at, they may realize that there's something right with that price movements, right? That is something with that price movements. Then by looking at this chart, they may realize that next resistance level might be 35, then 40, 42 level can be easily touched if this trend continues, right? It depends on the market sentiment and the continuation of the recent trend. then it can move to that level. But anyway, that we can see that if we can purchase a share at a lower price, right, compared with the previous year, then that's an advantage, right? Okay. Then normally there's a concept in stock market that is history repeats. That's a good concept, right? It may move to the previous level, high prices in coming coming years. Sometime within few days, it may move to that level. Okay, now we can apply that, parabolic SAR and other indicators here. You can right click here. We can insert indicator SAR, parabolic SAR. Okay, can you remember what I told you that, right? When we can see the parabolic SAR below its candlesticks, it means, right, that share is good for buy. If we see above the candlestick, if we see parabolic SAR above the candlestick, better sell. Now we can see the candlestick below that, parabolic dots below the candlestick. Below the candlestick, then yes, it's a good buy, because buy after drawing a chart and drawing trend line and resistance and support line, we can apply these indicators, MACD, RSI, parabolic SAR, right? Those indicators can be applied. Then these indicators will support you, right, to decide the next share price movement of the share, right? Okay, this is about deep product. Recently, I'm recommending to purchase deep products, right? And I believe that it may move beyond 50, right? And the time period may be 1 year from today onwards. Sometimes it may move 50, 60, then 80, right? Previous high, that was 70. Sometimes that level might be touched within 6, 8. Sometimes it depends on that economic recovery, right? And company performance. It may move to that level. Anyway, now the current price is good for purchases, good for buying. Okay, now we can apply another share, Sampath Bank. Sampath Bank PLC. Sampath Bank. Okay. Now the share price is what's the share price? Now Sampath Bank is trading at 33.60. 33.60. That's the price of Sampath Bank today trading price. Continuous uptrends we can observe during last 2-3 days. Sampath Bank. We can monitor share price during last year. It was around 60, about 60, now around 30, right? You can see the lowest point we observe, lowest point Sampath Bank, that is 26. That is on this month, right? Right, we observe the lowest price during this year. That is on yes, 11th of July, this month, 25. Right now, today 30. Yes, 34. Now today the share price 34. Right. Now simply looking at the Sampath Bank share price. Sampath is a good company, right? And it continuously it's continuously giving good dividends to customers, right? Then last year in this year, February, March 29th, it was around yes 53 rupees. 53 rupees, right? 53 rupees now came down to the 26. Now it is at 34, right? It is obvious that their share price moved to the, because as a fundamental sound stock, it may move to that. We can draw a trend line here. Okay, it may move to the 37 level soon, right? Then it can move to this level. Right, 37, then the 40, right? If the trend continues, right, it may move to this level too, right? This level can be touched within this 8 to 1 year time period, right? Okay, but purchasing this kind of share, right, is a fundamental value share at this price is a good decisions. It's a good decisions, right? You have to remember this website, that is investing.com, right? All information can be seen here. You can see all informations, even some prices of commodities also can be seen here, right? By using this stock market, commodities, cryptocurrencies, forex, economic information also can be seen, can be taken from here. World markets updates. Okay, now we can move to the next topic. That is called trends. That is called simple trends we can identify in technical analysis. Okay. Since this subject area is very right, strange to you, right? Strange to you because you might not be very interested in this subject, but anyway, it's an interesting field, right? Because this is about how to make money, right? Every time, every minutes, every 5 minutes, every day might be a critical day for investors to get money, right? And how to save your investment, how to increase your wealth, right? Everything depends on time and value, right? Therefore, at least there might be at least few students, right, who are interested in this area, right? Because one day you may join, right, within the industry. There are more opportunities in the field, but a highly paid industry, right? Okay, how we can identify trends in technical world, technical analysis? We say that we can say that trends are your friends, right? Trends are your friends. Right. Okay. Let's move slide. So from beginning, yes, trend. How to identify that trends, right, beyond what we have discussed, right? There are, I think I told you that the technical analysis is the vast area, because there are a lot of indicators, trends, and patterns. But by practicing, you can learn a lot of things, right? Okay. This is another trend we can observe, right? In technical analysis, this is called triple bottom. This is called triple bottom. I think you can remember I said that there's a pattern called double bottom, and this is triple bottom, right? Triple bottom. This is the price movement down, up, down, up, down, then up, right? Same, you can apply this. You can imagine this is the price axis, this is the time axis, right? This is called bullish reversal patterns. Bullish reversal, bullish mean that we can see bull market. Bullish reversal mean that we can see continuous uptrends, right? In up market, we can see this triple bottom, right? Here, we can see here, this is a one bottom, right? It came down and up, again drop, again up, again drop. Okay. We can see, observe one bottom, the second one, third one, then two off. Okay. Then we can, connect this above, resistance level. We can draw a line. This is called the neckline. This is called the neckline, right? Okay, we can draw this line, neckline. Then when it, after completing tree bottom, it moves up. Then it touches and move above that neckline. Neckline, right? This is the resistance level. Resistance level is the above level, right? This is the bottom. This is the below line, right? This is the support level. This is a support level. This is a resistance level. In triple bottom, you can identify here, right? When the share price moves above that, resistance levels, and again it came down to the resistance level, right? Then this resistance level become a support level. Okay. When this resistance, previously this was a resistance level, then now it becomes the support level. Then we can see the upward trends. We can observe upward trend thereafter. Okay, this is called triple bottom. This is called triple bottom, right? Next chart pattern, that is the triple top. That is the triple top. Triple top, right? So you can see here, you can imagine this is the price axis, this is the time axis. Yes, up, down, up, down, up, down. Okay, in triple top, we can draw here. This is the support level. This is the support level. Support level. You can draw. This is called the neckline. Support level. Okay. This triple top can be observed in declining market. Declining market, or the bearish, or the bear market. We can see here, right? This is the support level. Then say that the price move here, then down, again up, down. Then it intersect and comes down below the support level. Below the support level, right? Then it move off, again it touches, right? Touches the previous support level. Previous support level. Previous support level. Okay. Here, this previous support level becomes now the resistance level. Okay. Previous support level of that share now became the resistance level. Then we can observe share price decline during next time period. Okay, next few days we can see a decline in share price. Now we can move to the next trend. Well, this is also a bearish reversal pattern. Okay, because that's why I said that technical analysis is like a ocean, right? A lot of indicators. By practicing these things, you can become an expert in technical analysis world, right? This is called rise in wage. This is share price. Yes. Here you can easily identify. Now I think you can easily identify the resistance level and support level. Resistance above the support level, the below level, right? Up and down, up and down, up and down, right? You can see the gap in between resistance and support level, right? Okay. It's narrowing, no? Narrowing that the space in between support and right. You can see that decline trend, no? It's like a triangle, no? Yeah. Okay. Here you can see that it came below the support level, then it's now the previous support level becomes the resistance level, then declining. If you observe this kind of trend, because probably the share price may come down, right? We have to clearly observe these patterns. Bullish expanding triangle. Okay, you can see here the share price movement up, down, up, down, up, down. Okay, you can see some expansion of this wide, no? Expansion of this wide, right? Okay, then previous resistance level, this is the support level, then up, down, then again it touches and moves above that resistance level, right? Again came it to that previous resistance level, then previous resistance levels, right, becomes the new support level, then it move off, right? If you can see, if you observe this kind of trend, the pattern, then you can see that next the tendency of the share price movement might be that upward trend, right? Right. You can move next. Bearish expanding triangle. Okay, this is called bearish expanding triangle. Okay, normally that along with the previous day, then the previous day, presentations and these two presentations, right? I'll send all these details to you, right? Okay. Bearish expanding triangle. This also a bearish reversal pattern. You have to here clearly identify that this is resistance and support level. Okay, previous support level becomes new resistance, then decline. Bullish continuations. Bullish continuation means that the continuous upward trends can be observed if you monitor this kind of trends, right? Okay, this is the bullish flag. If we can identify, this is the original share price movement, right? Then within that within the chart, if you can identify this kind of flag, you have to draw. Yeah, okay, you have to draw this line, support level. This is support level, and the resistance level you can draw. Then it looks like a flag. This is called that bullish flag. If you can observe this kind of flag, right, then we can see price improvement of the share. This is called bullish flag. Okay. Next, that is the opposite of that. Bearish flag. You can see that the flag. This flag can be identified. This is called the bearish flag. The opposite of that, you can identify that this is the resistance. This is the support line. Okay, when you see this kind of, you can draw this kind of flag. You can observe this kind of flag. Then we can see downtrend, right? What would be the next react price movements? It might be a decline. It might be a drop in share price. Bearish flag. Okay, this is called bullish ascending triangle. Ascending triangle. That's also a bullish continuation pattern. Bullish continuation pattern. This means that the bull market trend might be continued when we observe this kind of triangle. This is called bullish ascending triangle. This is the support level. This is the resistance level. You can see this kind of up and down. Then previous support level become the previous resistance become the support. Then we can see upward trend. Bullish continuation pattern. This is the opposite. Bearish descending triangle. Here, up and down, up and down. You can clearly see that. You can draw this line. You can draw this resistance level line name, supporting line. Then previous support level become the resistance of the share price. Then we can observe a price decline. Right. This is also a very famous, famous bullish continuation pattern, right? It is called cup and handle. Cup and handle, right? This is the share price movement, right? If you can identify this kind of, you can draw, right? This type of, cuff, right? By connecting these, lower level, drop level, you can see a cuff, and then the handle. Okay, then the big drop you can see, and the big recovery, and then a small drop and recovery. It indicates that the investor can expect a continuous upward trend. If you observe cup and handle pattern in a share, right, then you can surely say that most probably that share price may move up, right? Cup and handle, because all these technical indicators and patterns, right? Because those patterns have been observed for some time, for 100 years, 10 years, 20 years by some expert in the equity market in the world. They have observed these patterns and they have marked all these patterns, right, in their records. And after 10 years, 20 years, they have mentioned that I have observed these patterns in these charts for this time period. Then this kind of, when this kind of pattern appeared in a chart, probably I observed and I experienced this kind of price reactions. Then finally those concepts and indicators become very famous in stock market and technical analysis. That is why finally those concepts and that theories, the concepts and explanation on these patterns, right? They came to the theories of technical analysis. Okay. Next thing. This is the opposite, reverse cup and handle pattern. Reverse cup and handle pattern. Okay, you can connect this upper level. Yeah, cup, handle, reversal pattern. When you observe, when you see a reversal cup handle pattern, next price reactions might be a decline in the market. Decline market or the price drop can be observed within next time period. Okay, as I previously mentioned, candlesticks, right? These are candlesticks. Okay, this is the bullish candlesticks. Okay, sorry, this is a bearish, and this is the bullish. Sorry, the bullish candlesticks, bearish candlestick, right? This is bullish, right? The close high. You can easily identify the how we can interpret the candlesticks. As I mentioned, this is the body of the candlestick. This is the open price, close price. This is the bearish candlestick. Drop market represent this. Drop markets are represented with that bearish candlestick. Up markets are represented with bullish candlesticks. Okay. Open price, closing price, high, low. Okay. Okay, I'll briefly explain these things, right? Briefly explain the different chart patterns, different bullish and bearish candlestick patterns, right? Okay. This is the bullish candlestick, this is the bearish candlestick. Okay. Bullish candlesticks patterns. Here you can observe the red candlesticks represent the decline market, and when you see this kind of pattern, this is called the hammer, like a hammer, no? Right? It's like a hammer. If you observe this kind of hammer candlesticks, right, then we can see a market improvement. Okay, if you observe this kind of hammer pattern in the candlestick, after 2-3 days decline, we can see a bullish up hammer candlestick pattern. Then next 2-3 days, we can observe a market improvement in the market. Then other side, this another candlestick pattern, inverted hammer, right? Continuous, there are 2-3 drops in the market, continuous 2-3 days drop in the market. Then if you observe this kind of pattern, right, candlestick pattern, this is called inverted hammer, then we can observe an upward trend in other days. This is called the dragonfly doge, right? With 2-3 days drop of this red candlestick, then we can see green bullish candlestick. This is called the doji, dragonfly doji, right? Then we can see an upward trend in next 2-3 days. Then bullish engulfing. This is called the bullish engulfing, because I'll discuss those other, sometimes you may realize the technology is actually the difficult task, actually very easy. Those are very, I have explained that, that we set up the technical analysis, because without knowing those things, right? Without knowing those things, I think it's not worth thing, because if you apply those things practically, you can learn more, you can earn more, you can learn more, you can earn more. Bullish engulfing. This is called the bullish engulfing pattern. This is also bullish candlestick pattern. You can see that 3-4 days decline, drop market, bullish bearish candlestick. Then next day we can see a big improvement, right? You can see the body of this bullish candlesticks. These are bearish candlestick. Then after next day we can observe, strong candlestick with that strong body. Okay, this is called bullish engulfing. Bullish engulfing. When you see this kind of trading pattern, because continuous decline, then sudden improvement in next day, it means that improvement can be continue for another 2-3 days. Okay. Next thing, piercing line. You can see that declining market, bearish candlestick. Then we can see a bullish candlestick. Then we can observe, we can see that some improvement in next 2-3 days. Okay, next candlestick pattern, morning star. Morning star. Morning star. Okay. 2-3 days decline bearish candlesticks. Then we can see this kind of candlestick. The comparatively this small improvement after 2-3 day drop. We can see a small improvement in that day. Then when you observe this kind of pattern, it means that this is a trend reversal pattern. This is a trend. There was a declining trend, but while appearing this kind of trend candlesticks, that is called morning star. Morning star, right? This is positive candlestick. After certain time period of drop, we can observe some certain improvement, small improvement. Then that improvement can be continued. Okay, then we can see a improvement in next 2-3 days. That is called morning star. Next thing, morning doji star. Same way that the decline for few days. Then this doji star. This is a positive. Doji mean that actually may neutral candlestick pattern. Doji mean that no improvement, no significant improvement, same level, right? After continuous decline, right? Some big decline, no? Some significant drops per day, right? We can see for 3 days, then no drop, but same level. The market remaining the same level the next day. It means that there's a good indicator, because when there's a drop and next day there's no any drop in the same level, then we can see a upward trend in next few days. Right. Next thing, 3 white soldiers. Right? 3 white soldiers. 3 white soldiers. We can observe here. 3 white soldiers we can observe here. Continuous decline in the market, then continuous 3 days up can be observed here. Then we can see that this trend might be continued. Those are the bullish candlesticks patterns. Bullish candlestick patterns. Here, below I have mentioned that bearish candlestick patterns. Bearish candlestick pattern. This is called the shooting star. When there's a continuous upward trend, suddenly there's a bearish candlesticks. Then it may continue. This is called hanging man. The opposite of the inverted hammer. With continuous upward trend, there's a negative candlesticks, bearish. Then that bearish candlestick, bearish trend, negative trend may continue. This is called gravestone doji. With continuous uptrend, there's this kind of candlestick. That is called the gravestone doji. Then we can see some decline in the market in next few days. This is called the bearish engulfing. With this kind of continuous upward trend in the market, we can observe this kind of bearish candlesticks. Bearish candlesticks. Okay. This is called bearish engulfing. Bearish, it means engulfing in that the continuous upward trend might be right converted into negative. Right. When we observe this kind of engulfing, right, then we can see this kind of drop. Dark cloud cover. Dark cloud cover. It's another bearish candlestick pattern, right? Okay. Evening star with a continuous upward mark in the continuous upward market. If you monitor this kind of bearish candlestick, this is called evening star. Then in above you can see the morning star. Then the price improvement can be observed in next few days. But when you observe this kind of negative bearish candlestick after 2 days of improvement, then there might be a trend reversal. I mean that we can see some decline in trend in next few days. This is the evening doji star, the same with continuous upward market. If you monitor certain, this kind of doji star, I mean that in next few days there might be a decline. This is called 3 black cross. 3 black cross. With continuous improvement market, if you monitor continuous 3 days decline and 3 days bearish candlesticks drop market, then it may further continue. Those are the candlesticks patterns we normally commonly use in technical analysis, right? We can simply apply these things, but as I previously mentioned that you might be an expert in technical analysis by practicing, right? To swim in a river, you have to jump into the river, right? Okay. So the explanations. Okay. Trends, how to identify trends. This is that bear is engulfing. Bear is engulfing, decline. Bear is engulfing. When this kind of upward market, then big red candles, then market may come down. Okay. With continuous improved market, we can see this kind of big red candlesticks. It means that trend reverse, then price may come down. Here you can see here, with the decline market, we observe one day there's a small drop in the market, then next day there's a positive, a strong candlestick, bullish candlestick. Then this is called bullish engulfing. Then negative market sentiment reverse. Then improvement started. Those are practical aspects of applying these bearish engulfing and bullish engulfing. Okay. Dark cloud cover pattern formations as an example. Okay, with continuous upward trend, this day there's an improvement, and weak improvement. Then next day drop. This is called dark cloud cover. It means that this is significant indicators of declining market. Then reverse, that bullish trend might be reverse when we can see this kind of candlestick, red candlesticks or the drop candlesticks right here in the chart after continuous few days upward trend and with bullish candlesticks. If you observe this kind of bearish candlestick, it means that market may come down. Some examples here with candlesticks: inverted hammer, then upward trends, piercing line, yes, improvement, hammer, then the upward trend. When you observe this hammer here, then upward trend can be observed. Here, 3 white soldiers. I think you can remember what I said in when explaining 3 candlestick, 3 white soldiers. With continuous decline market, suddenly there are 3 days improvement with sound and strong bullish candlesticks. Then that bullish trend can be continued. That is called 3 white soldiers. When you call soldiers, you can remember that last day night what happened in that gold place, right? That was clear that President or Secretary is the building, right? 3 white soldiers. Okay. Another example: inverted hammer, piercing line, hammer. Okay, that's all about that. Trends. I think so far I have discussed the basis of technical analysis and theory of analysis, technical analysis, and what are the 2 basic we need to identify in technical analysis, and how we can practically use these learned thing, right, when predicting share prices, right, and different type of trends, like bullish and bearish candlesticks patterns, different type of charts, right? And different type of indicators like MACD, RSI, parabolic SAR, right? How to draw trend lines, how to interpret the market, right? How to predict a price, right? Based on price movements. Therefore, I think now you are in a good position to understand the technical analysis and technical analysis indicators, and you know how to use that investing.com site to get charts and other technical analysis summaries of buying and selling support the suggestions from investing.com. Okay, then I think I have covered that the everything what you need to know, right, about the technical analysis and other required thing you need to know. Okay, then thank you very much for attending the session, right? If you are having any questions, you can type here. You can type here, then I can answer to that questions, because since we have another a few minutes remaining, right? If you have any issue, you can type right in that chat box. We can discuss and I can clarify. Okay, since there's no any that questions from your side, I would like to that wind up the today's sessions, right? Thank you very much for your attentions. Thank you very much.
Thank you, sir.